Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
It is a Friday morning finally, and you're with us on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. There are two of us here in the studio, so good morning.
Morning.
But the third one is also with us, but not here in the studios. He is joining us from NSE. Nigel, good morning.
Is he starting the Friday party early? Already out of office.
On work, Surbi, don't get me into trouble. Markets are looking up, so I think this week has been a fairly good week.
Yeah.
No, absolutely. And it's been a long week. It's been an arduous week. We started with the weekend, of course, all those developments. Thankfully, the news flow has improved when it comes to the situation at the border. We're back to talking more here and now markets, more here and now earnings and stock-specific action. And there's been plenty of that as well, Prashant.
Yeah, I mean, statements galore, right? It's like, I don't know what's hitting you from where, but something always is. So let's take it from the top in that sense, right? In terms of what you need to know as we begin a new session. You basically had a mixed kind of day last night as far as Wall Street is concerned. The S&P about 0.4% higher, the Nasdaq about 0.18% lower. So it's not a decisive kind of a day. The 10-year, though, was a very decisive move. The 10-year yield was down 10 basis points. I mean, actually, you can look at the 2, the 5, the 30, all of them down. I mean, between 10 to 15 basis points, 4.43 on the 10-year yield. Now, this was largely on the back of slightly dovish skew for April data. And you had a bunch of, I'm not going to go into the details here, but you basically had retail sales, core CPI, initial claims, industrial production. Not that all of it was bad, but, there was a dovish skew clearly. If you had to pick one data point, which clearly was a miss, it was the retail sales number. So are we starting to see the first signs of cracks in the U.S. consumer strength? But of course, it's also accompanied by softening of prices, which then has implications for Fed's reaction function. By the way, the Fed implied rates basically are expecting 50 basis points, 225 basis point cuts for 2025. The dollar index was down as well, about 0.25%, 100.78. The dollar has moved up. The broader dollar has moved up lately. Oil prices were down, and again, I mean, this week, excluding yesterday, oil's up pretty big. I mean, from about just under 60, it had gone up to about 66. We're back at about 64.5. I was talking about the headlines, right? Trump yesterday claiming that they're very close to a nuclear deal with Iran. And you basically had the top advisor to the supreme leader of Iran in an interview to ABC saying that Iran would be willing to abandon their nuclear ambitions in exchange for sanctions relief. So it's not just from Trump, but of course from the Iranian side as well. Who would have thought? But that's essentially the world we are in right now. The big talking point yesterday, and this happened mid-afternoon yesterday, was, of course, Trump expressing his displeasure with Apple essentially saying publicly that they want to make everything that they sell in the US in India. And essentially Trump saying, well, we've tolerated you sort of making out of China for so long, but well, now come back to the US and India can take care of itself. Lots of back and forth, lots of talk around this, and we'll continue to discuss this. The bigger sort of point to my mind is simply this: can Trump or anyone else, really bridge the cost economics? I mean, there are some estimates which suggest that to make that $1,000 iPhone in the US, I mean, the price basically goes up to $3,500. I mean, it's just not viable. So can Trump or any other administration really force large global corporations to make changes like this? Which are basically based on economics. Longer term, maybe they can affect some shifts, but I don't think, this really does something in the very near term. But still, I think these are headlines worth taking note of. Now, just to circle and tie in the levels, Nifty yesterday broke above the high of 24,973. And by the way, it took off like a rocket, and the rocket happened, the takeoff happened mid-afternoon, and it never looked back. So we were by far the biggest outperformer in Asia, in the Asia Pac yesterday. Other markets were largely sulking sideways, slightly higher. Now, the resistance now is 25,000, on the way up is 25,310. It's a level I've put out earlier as well. It's nothing but the 78.6% retracement of the full fall that we've seen. Support stands at the 40-day exponential moving average, which stands at 24,629. You know, typically a week before, the week after next day's expiry, monthly expiry, typically a week before the monthly expiry, markets stall a little bit. So we'll see. I mean, if the market if the market's played out something here in terms of the rally from the lows, I mean, I think we'll find out next week. So in that sense, limited point, perhaps a little. If you're trading short term, a little careful. But those are levels essentially on the Nifty. For the Nifty Bank, we bounced back from the 20-day moving average. Here, the resistance stands at the high of 55,500. It's very close by, about 150 points away. And of course, the support stands at yesterday's low, which is 54,442. GIFT Nifty will give you a quick sense of how we are likely to start. Lots of specific stocks which we will address as well. It's about 100 points higher this morning as well. Surabhi.
Absolutely, Prashant. You're right. I mean, when you said you don't know what hits you from where in terms of news and information flow, it's like those missiles are still coming from all directions, right? And obviously, we're looking at that. So let's start with Asian markets. Asian markets actually have a pretty tepid picture this morning on Friday. A lot of them are falling. Taiwan's the only one that's flashing some green. The Hang Seng is down a lot, 1% down. Mainland Chinese markets also lower. Japan is also lower. So color across Asia is red. Some of the developments sentimentally are kind of souring the mood out there. One is this GDP number out of Japan. There's a contraction, which was expected, but it's more than what was expected. The economy has contracted 0.2% quarter on quarter. It's contracted 0.7% year on year as well. And this is as those trade discussions with the US are still very much underway. So that's number one. There's some negativity around Chinese tech this morning because Alibaba missed estimates. That stock's been trading lower by about 5%. So therefore, I mean, overall, Chinese tech, the sentiment is a little lower. But I want to focus more on a lot of the geopolitical and trade-related developments between India and the US because a lot has been said and the Indian side has also responded. Yesterday, remember, while he was speaking in the Middle East, I think this was a statement in Doha, President Trump said that he claimed that India is willing to reduce its tariffs with the US to zero. He said now they were very high earlier and now they're offering zero tariff. We've got a statement from Mr. Jaishankar on this, and we'll play this out in just a second. Essentially, he's saying the trade talks are still going on. These are complicated negotiations and nothing is decided. Any trade deal has to be mutually beneficial and has to work for both countries. So let's actually hear out the sound bites, what Trump said and what the Indian External Affairs Minister has said on the exact situation or the exact sort of positioning with respect to the US-India trade deal.
You couldn't do business in India. We're not even a top 30 in India because the tariff is so high, to a point where they have actually told us, I assume you too, Scott, you were working on that also, that there will be no tariff, right? Would you say that's a difference? They're the highest, and now they're saying no tariff.
These are very complicated negotiations. They are very intricate. Nothing is decided till everything is. But any trade deal has to be mutually beneficial. Any trade deal has to work for both the countries. And I think that would be our expectation from the trade deal. And until that is done, I think any judgment on it would be premature.
There you see it's out in the open, the quote-unquote disconnect, if I could call it that, between what the US side is claiming and what India's official stance is, at least as of now. And remember, the Commerce Minister is going to be in the US, and let's see what comes out of those meetings. That will happen over the course of the weekend and next week. Speaking of trade, actually, we have our own trade numbers as well, April, and the trade deficit has actually increased for India. The trade deficit now stands at about $26.4 billion, which is obviously substantially higher than where we were earlier. 19 was the number, 19.2 almost in April last year. Exports have gone up 9%, but imports have gone up 19%. And that explains the increase in the deficit. Now let's come back to markets. And here the good news is that the FPIs were back. And even this morning, so whenever we look at the Chinese market actually faltering a little bit, perhaps sentimentally it gives a little bit of a boost. Because if there's a sustained China rally, then it could spell a bit of a difficulty for India. But that's not what we're seeing right now. And look at that solid buy figure. That explains the exuberance on the large cap side of the market yesterday. 5,000 400 crores of net buying coming in. Domestic institutions were on the sell side yesterday, selling stock worth almost 1,700 crores. So FPIs are here. That's good news. In terms of individual stock action, there's a raft of earnings to go over. But beyond earnings, I'll watch out for two stocks. IndusInd Bank, remember, it has not participated in the market rally so far. Last couple of days, it's always been sulking. And now we know the reason why. It seems there are more accounting issues that are coming out of this internal audit committee, discussions that have been going on. We'll tell you more about it as we go forward. And watch out for Bharti Airtel. Our sources are indicating that perhaps Seng could be looking to sell a little bit of its stake via a block deal today. So two specific stocks in focus as well. Nigel.
Well, the Nifty is back at 25,000, right? But various portfolios are not really reflecting that. That's because yesterday, the Nifty managed to conquer the 25,000 mark on a closing basis. That's the highest we have seen since October 15th. But just take a look at the Nifty Next 50 or the small cap index. They are a distant away from those levels that we saw on October 15th itself. The Nifty has recovered its losses, but the broader markets are yet to participate. So if this market is going to be heading higher, I expect the broader markets actually to participate with greater gusto and maybe in fact outperform from here on. Couple of highlights of yesterday's trading session. Why did we see such a big spurt, particularly midway through the trading session? Because yesterday was weekly expiry and the call writers, they got stumped on the wrong side. And that's why you had a big spurt out there. And just take a look at the NSE option premium turnover. That crossed 1 lakh crore yesterday. That's the highest that we have ever seen. So it was a very, very big day in terms of the options market in yesterday's trade. And that was the reason that we went up, besides the FIs turning buyers. But what do the FIs do in the futures market? Well, in the index futures, I normally tell you all that I like to see FI net short in the market. And that's the way it played out yesterday. Because in trade yesterday, the FI net short positions came down by around 20,000 contracts. They added some longs, they covered some shorts. So that's why the swing factor was close to around 20,000 contracts yesterday. They are still mildly net short. What about on stock futures? Out there as well, there was a short covering bounce that did play out. Because the shorts reduced by close to around 40,000 contracts, while you had long addition of around 59,000 contracts, which is telling you out there you had a swing factor of around 1 lakh contracts. Moving to the options data, well, a couple of strikes are fairly active. The 25,100 call, there seems to be some writing that we've seen at those levels. So those call writers will like to defend higher levels. While the 25,500 call, there was some out-of-the-money call buying. In case this market is ready to go higher, then, someone's taking a punt and paying close to around 44 rupees. On the downside, 25,000 put, that was active in trade yesterday. The premium's around 180 rupees. So plugging in what we're seeing on the options data, well, on the upside, the resistance comes in at around this 25,270. The gift would be suggesting a higher opening, but this is the level that you need to cross to get a bit of a short covering bounce. As of now, the bears believe they can defend this 25,300 odd mark. On the downside, since we saw writing at the 25,000 put, the 24,800 mark becomes extremely important. But the Nifty Bank, that's the one that holds the key. It's been unable to decisively cross that 56,000 odd mark. And we've seen it numerous times in the last 1 month or so. It's gone till there, but it couldn't conquer that. The fresh leg of this up move starts when the Nifty Bank manages to decisively take out the 56,000 odd mark. So broader market outperformance is what I'm looking forward to from here on, and the Nifty Bank taking out that 56,000 odd mark. One stock that I'm looking at is Linde. It corrected close to around 40% from the peak. In the last 1 year, the stock is still lower. But in the last few trading sessions, it's taken out the 20 DMA, it's conquered the 50 DMA as well. And there has been a good delivery-based buying that we're seeing on Linde India. So I'll keep an eye out on that one. Just take a look at the delivery yesterday in comparison to the last 10 days. That's a stock I'll track from here on.
Okay, all right. Got it, Nigel. Let's actually kickstart with the equity call of the morning. Mahesh Nadurkar of Jefferies says since March lows, MSCI India is up 14%. MSCI India price to earnings is now at 23 times, implying that valuations have become demanding once again, especially in the context of FY 25 to 27 EPS CAGR expectation of 11 to 12%, with the usual downside risk. Outlook for flows, both domestic and foreign, remains the key positive, which would be conducive for potential equity supply, which in turn can cap the upside. They have added Ambuja and BEL to the model portfolio and trimmed weights in NBFCs as well as in Coal India. So Mahesh sounding a slightly cautious note because valuations are running up, he says, and earnings may not catch up.
Okay, well, that's the view coming in from Jefferies this morning. Let's get